Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
Good morning. What is the face when your audience shows up but you don't? It just took me a really long time to eat lunch or breakfast. I'm sorry. But guys, it's FOMC day. There's no news this morning. Nothing's happening. Let's come and look at the charts. Here we got the 10-year treasury. Pretty flat past 3 days, man. I mean, even Friday was kind of a little, okay. Okay, Thursday there was a move. S&P, I think the thing over here is, like, it's just wild to me. Actually, maybe we can see it if we come to, like, day in ZN. Yeah, and we look at the range, right? Like, we had this period of relatively high volatility here, and then is just completely fallen off a cliff. So I think that the market is really looking to the Federal Reserve meeting today for some clarity, and I really don't know what they expect that Jerome Powell is going to say to give clarity, but we'll see. Here's the S&P 500, a bit of decline yesterday, but it was mostly just giving up the gains from the day before. We'll see if things turn back down again. Probably they're going to be waiting for the Federal Reserve meeting, though, right? Oil coming back a little bit. Gold and silver, though. Whew. Look good. Copper looks amazing. Japanese yen still kind of in a little bit of a down trough, and the dollar. Okay, well, the dollar has been looking weak. I see a lot of talk about the dollar all of a sudden. It was like when this was happening, nobody was saying anything. Now it's going flat and everybody's talking about the dollar. Okay. And the Bitcoin still below 85,000. So, what do we got to do here today? The first thing that we've got to do is I was going to post a video about cumulative delta, and I didn't because my video editor was going to make a thumbnail and he didn't. I'm sure that he has a good excuse. Kind of probably a family emergency or something, because I haven't heard anything from him. It means that he didn't just forget that something happened. But we can just whip something up really quickly. Do this, and then maybe we'll get into the machine learning bit. I think we are having a little bit of unusual action in the treasuries this morning, though, so we need to stay on our toes. Make sure we have the new squawk and Twitter going. Centered. Da, 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 da. Layer effects. Outline. Black. Usually 15 pixels is good. 10. Okay. Two days late, but that's okay, right? Yeah, you made a video on prop firms and you inadvertently made a video on why then you obviously didn't watch it. You might be a low IQ individual, sorry. Late is kind of the entire thing. I know, right? When Lambo. Okay. Hit the A at when the stream ends. 9. Gotcha. There we go. The thing that I think is so funny about no, you know what? I don't want to take it that way. I don't want to take it that way. I'm gonna take this different approach. If you go and you create an algorithm that just picks a random time of the day to take a random trade, and you have it trade for a year, there is a 30% chance that it will come out at the end of the year profitable. 30% chance. And yet all of the statistics, especially those statistics that we get from prop firms, is that like 90% of people fail. Okay, only 5 to 10% of people get payouts from prop firms. Okay, so retail traders perform worse than random. Why is that? Like, I'm coming in and I'm doing something and I'm just taking random trades, then I should make it 30% of the time. Why don't I make it 30% of the time? Because retail traders on a whole are fucking stupid. Retail traders on a whole are fucking stupid. The type of person that gets attracted to day trading is usually a person that didn't do a whole lot with their life when they were in school, didn't really know what they wanted to do with their life, and now they're coming out looking for something that they can do to make money, to try and gain some freedom and try and gain some purpose in their life. And day trading is like the one thing that can potentially make tons of money that has absolutely zero barrier to entry. And so you get a large swath of people that are trying to get into something that is extremely quantitative, that is extremely strategic, when they don't have any of those skills whatsoever. And that is why, on the whole, that retail traders fail. It's because the entire industry tends to attract people that are poorly suited to doing it. The kind of person that would be well suited to doing it usually says, oh, I'm going to go to university and get a big degree and go into business. And then they're too busy doing business to do day trading, right? There's this narrow kind of exception, which is like somebody that they went into, which is, at least I think that this is the exception because I feel like I fit into this category, is they wanted to go into technology or engineering, and then later on they realized that, hey, actually the stock market is really cool too. And most of the people that you see, like these big quants and guys that really made it big in hedge funds, and kind of fit in that category. Okay, simple maths is tack my funded futures cost 74 for a 50K account. Well, okay. With that, it's a 50K account doesn't mean anything. It's not really a 50K account. It's really a 2K account because you only get a 2K drawdown, right? If you take trades at random, you have a 30% chance of passing, then about a 40% chance of doubling your drawdown total. Well, okay, so it's worse than that though, right? Because you have to pass it twice, right? Like, unless they have a different setup, you don't get a payout until you've. So you mentioned a specific firm, so let's go and look at their firm, okay? Roadmap. Minimum payout is $1,000. Okay. So you have to. Oh, wait. Can go in and can it? No, that's not what I want either. Show me the different plans. Here we go. Okay. So you say it's $74. That must be with some sort of a discount, right? It's 127. Yeah. Let's just go with the 127 for now. So you have to pay 127. You have a 30% chance of winning. And then you have to make 1K on top of that. Okay, which means, and I think from that 1K, you're not getting more contracts or anything like that, right? So the chance of you, well, we could come and run the thing. Terminal. Did I close my terminal? Oh, there it is. It's over here. Oh, okay. So it's a 50%. So your target will be, after that will be 1,000, and your drawdown will still be 2,000, right? Okay, so I don't have to do that math. So from here it's 50%. 50%. Okay. So that means that you have a 15% chance overall of making $1,000. Right? So if we bring a calculator over here. What would be break even? $1,000 divided by 127 is 7 combines. $6.67. Is the number of combines that you would expect to have to do to get a payout. So it's actually not, it actually comes out exactly the way that the Monte Carlo simulation expects. There's only a 0.3, they're giving you a 0.3% margin. And that 0.3 is probably just accounting for like other rules, essentially. See, you didn't think about that you have to hit the minimum payout, did you? Like I said, day traders by and large are stupid. I have a really smart audience, but I go on Reddit, I go on Facebook, I go everywhere else where I'm seeing people talking about day trading, and my conclusion is that by and large they're stupid. They're not the brightest bulbs. Day trading does not attract the smartest people. So here you were super convinced that you had found a you know, kind of statistical arbitrage opportunity, and you had not. I don't understand why you'd bother with prop trading. If you're good enough for prop trading, logic would dictate you're good enough to trade your own capital. Yeah, because what you wouldn't. Yeah, if you were really so great that you were gonna pass the combine like every time, sort of a thing, there's no way that you would do a prop firm in the first place. This person that's like, yeah, they totally know how to trade and they have everything they need to be able to come in and pass a combine, but they just don't have the capital. They don't exist. They don't exist. How did you get to that point without the capital in the first place? Doesn't happen. Nope. The whole thing is premised on selling you a dream that you have absolutely selling you a dream that in all likelihood you have zero chances of actually accomplishing. Yeah. Don't trade off of charts and trade your own money. Yeah, that's the way I would, And trade small. Yeah, if you can wallop a firm's combines, you should have no problem starting a futures account with a paltry. Yeah. So that's the other thing is why would you get funded and get a bunch of payouts and then not go on your own? No, I didn't say you get a $2,000 payout. I say you get a $1,000 payout. That 6.67 should come out to be 1,000, not. What the heck? Where are you getting that number from? 6.67 times 127 should be. Oh, okay. Wait, where was I getting that number then? No, the 6.67 was the. Yeah, okay. 1,000. Divided by 127 was... Oh, you know what? I must have typed something wrong. No. So you got step one. Step one. 3,000 target, 2,000 drawdown. Okay. Reward is step two. Okay. Which is you're funded. Okay. This is. My gosh. You know when it does that? 30%. Step two. You're trying to make $1,000. It says the minimum payout is 1,000. The drawdown is still going to be 2,000. Okay, so this is 50%. And what you do is you times the two together, right? So there's a 15. You have a 15% chance of making $1,000. Right? No, it's not 66%. It is, I promise you it's 30%. What you do is it's the difference between the reward and the target divided by the reward. So 1/3. No, this one is it's going to be 50%. Let me come back over here. When you do the Monte Carlo simulation, it comes out to 33%. And the more that you do it, you basically say target minus drawdown over target. So 3,000 minus 2,000 over 3,000. comes out to 1/3, 33%. But I just rounded it to 30%. There's no way, dude. I just explained to you where I got that from. You paying attention? Target minus the drawdown divided by the target equals the percent of you doing it. So if the target is it's actually the absolute value of this, right? Yeah. Approve it. Let's just come in and change the thing. Right here. A max drawdown is 2,000. Target. Oh. I don't have it installed on this one. I need to do it on the virtual machine probably. Wait, why do I... I don't remember how I ran it last time. Yeah, I'm telling you the probability of turning $2,000 into $1,000 is 50-50, yes. I might be getting it wrong. I'll look stupid when I'll run the Monte Carlo and it contradicts me. Over here. Oh, it's because I would have run it in... Wait, do I have that one? Oh, I do. I have it over here. Okay. That's a little bit better. Over here. No. Of course, kinda info and oops. Dash ENVs. Yep. Conda activates. And activate Monte Carlo. Okay. Oh. It is 0.6. Okay. I'm wrong. So let's do this again. So you get a 33% chance of passing this one, and you get a 0.66% chance of passing this one. %. Okay. So you get a 20. So you actually have a 20% chance of getting the $1,000 payout. Okay. So that means that you should have to pay 5 times. Okay. So if you pay $127 5 times, $635. You spent $635 to make $1,000. So you made what, $365? Presumably. Well, let's see. Let's come back and double check a couple of things now. Did I close? Why do I do that? So it was amazing. I was going down Porky, which is a relatively long, steep blue hill, and the whole thing was just powder, and everybody else was I don't know, kind of scared of the powder, I guess, and I just charged down it, and it was so great, shooting up powder 15 feet behind me. It was great. All right, which one were we doing again? Oh yeah, funded. My funded futures, right? Yeah. Okay. Their max position is smaller than the other guys. Okay. Okay. Let's also come in here and check. On this one, we had the... Oh. Okay. It's not live. Oh, and it's a monthly membership. So that's another thing is we'd have to consider is that you have to do it all within a month, right? Wait, where are you getting 2,500? That was earlier. The drawdown is 2,000. So you're not making a whole lot of money from it, though. Though. I guess you make in 50%. But you can only do it on small amount of capital. So let me go back through here. So it's 33% chance. Normally these come out to be a 10% thing. These guys have slightly different rules. Oh. Why is that? They have not updated their website. They changed it. It was 97. Now it's... But wait, they're saying trailing max drawdown 2,500? Or is that because of a different account? These two contradict each other. But you know what? The math is showing me that these guys will probably continue to adjust their numbers because their numbers aren't right. Yep, I don't need two of those. Man. I think there's probably something we're missing, though. Okay, they won't allow you to have trades open around news. That's pretty killer. Ugh. Hmm. Man, the treasuries just got killed. I guess it's not huge, but still. They pretty much just have been down since we've been going. Yeah, well, one of the things that we're not even factoring in here is that with the way that they have their rules set up, you're probably going to take 2 months to pass, right? So if you consider that every time that you take the evaluation, you're actually spending $254, and then you do that 5 times, then you're definitely not coming out, right? You ever run into people outside the stream that know your stream? No. So is it actually, are they actually letting you trade 3 full contracts? That's another question, is like, information, trader evaluation. Three E-mini contracts. E-mini contract is $12.50, right? $26 ticks. 6 points? I mean, if you're doing that regularly, I don't think that you would, it would be very long before they would change their rules, right? It seems that the key difference between this one and other trader evaluations that might make this work is that they're they will give you a payout after 1,000. But let's just like double check here. Step-by-step request process. Ensure you've reached past your evaluation and reached payout eligibility on your sim funded account. Complete know your customer, open an account, submit your payout request via the dashboard. Ensure your request meets the minimum withdrawal amount for $250 for starter and $1,000 for expert. Whoa, wait a minute. Is the starter plan the 50K one? Oh, this is starter plus. Oh, hold up. What is Starter Plus? Uh-huh. This one is even more different. So what does Starter Plus mean? Contract sizing. Let's search. Starter Plus. No T1 news rule. Like when I read these things, it's like it's frustrating because the information isn't all in one spot, right? This new plan features following 50% consistency rule in the evaluation stage only. No consistency once funded. Daily loss limit removed in the evaluation and funded stages. No T1 news rule to follow in the evaluation and funded stages. Why do you say evaluation and funded? Those are the only two stages, right? Okay, anyways. Enjoy all the current features of Starter Plus account and be funded in as little as 2 days. The sim funded stage of the Starter Plus plan. There is now no consistency to follow. Daily loss limits and T1 news rules are also removed. Gee, 30 winning days are your max payout. Well, now if you can get funded with just 30 winning days, then that's also something different. That would change things considerably. Oh, so you've tried it, they catch you and they ban you, huh? It's almost like they don't actually want you to make money. Oh, that's interesting. Contracts on evaluation and contracts on sim funded are different. But it's only on the micros. You get half as many micros. Qualification for payouts. 5 winning days of 1,000. So the very thing that you say that you're doing, they don't allow. Okay, so that's really weird. So this Starter Plus kind of looks to me like they have just added an additional level of rules that would require more sophisticated ways of calculating like what the break even is on it. But then there's this other one. The starter account. What's the difference between the starter and the expert? Oh. Oh, that's weird. You expert, you pay more to have a larger target? What? Yeah, the way it's different is because you need 5 green days on starter, which gives House Edge a greater effect. Yeah, it's like they've added an additional level of rules so that it seems more attractive when it actually is not. It's just more complicated and you have to read into more detail. Like it's already sounding like you know, like it's kind of set for you to think that you can get away with something when that you actually aren't. On this one, it's saying 42. On this beginner. Come on. And then this one, it says your minimum withdrawal is 250. Well, that's kind of curious because then that's all of a sudden it's like you should be able to do it 50% of the time, but you only get one payout. Huh. That's weird. You see what I mean? It's like they have introduced a large number of options with significant differences between those options that would change like the theoretical break-even rate on a random trade. So that you kind of get lost. Because at this point, if you have 250 like that, oh, No, that can't be right. I wonder if this is changing it. How does that come out to 0.5? Hmm. $17. That I'm doing something wrong. Because it's saying that you have a 42% chance of passing the first thing. And then if you're only going for the $250 target, it also says that that's 42% chance. Which doesn't make sense. And then that gives you a 17% chance of getting funded. Make $250. You would think that it would be like 90%. Yeah, but the Monte Carlo is not saying that. Is it because I just need to increase the number of trades here? That there's like a section of people that don't blow out but aren't profitable either, and that changed it a little bit. But it's also, it says win rate 0.5. Okay. Well, win rate 0.5, that's just our factor in win rate, yeah. But this is still giving me 42, right? What the heck? This little formula that we had about like what the pass rate should be and everything, there's something we don't understand about it. Saving, no, Lincoln's. I run it, come over here. 741. It's now updated. 43. Now it must not be taking the, because look, the profit is still 3,000 here. Nah, it's doing something wrong. Target 250. Oh, I've changed the something here. What's this? Oh, okay. I knew it. Basically, I had come in here earlier and made some little changes to do a test on like multiple contracts. That's better. Ooh. 92%. I should make a version that asks me for the numbers, but so if the target is 3,000, okay, that looks more like 1/3. Still writing it. What's happening here is let's just come back into this and change this to like back to what this was and make them equal. That should make it, you know, a little easier for it to draw. $33. That is also suspicious, though. %. But see, it doesn't make sense because what you're doing is 30% chance, right? So basically, you're using 3 point something attempts to get a payout. So you're paying the 127 times 3. You're paying 381 to get a payout of $250. See? In that one, the math doesn't make out. Yeah. It doesn't work with the $250 payout. Correct. But that's where I'm saying, like, okay, so it doesn't work with the smaller one, right? But then when we come back to this, sorry, we weren't doing starter plus, we were doing starter. Oh, 97. Okay. 97 times 3. 291. 291 to get a $250 payout, right? It's closer, but it still doesn't work. Okay. So what's dude, this is actually way more devious. This makes me like this company even less. See, what you were doing was you were kind of using all of this starter qualifications to do things and assuming that it was the same. But to do the one where it's like $1,000 payout, you have to move up to expert. And then guess what? You're paying twice as much. And then the math doesn't work out on that one either, right? Because then you get the ones that we were kind of looking at where, well, okay. Let's just do it the right way so that we can kind of prove here. So here, it's saying the drawdown is 2,000 and the target is 4,000. Wow. Pass is actually really bad. Okay, so now it's saying only 15% get to that. Dude, the expert is a terrible deal. Yeah, it might work if you do the earlier one. You like how the simulation works? Yeah, basically what it does is it basically says, okay, I'm going to take $200 target, $200 stop. And then based on what my stop and target relationship are, it determines what the win rate is. In this case, the win rates can be 50%, right? My stop and target are equals can be 50%. It's actually worse than that because there's the spread. Okay, but you know, if you kind of set things up with large enough stops and targets and everything, you can kind of get it to that place. Okay. And then it just rolls the dice and it keeps going each trade. Did I pass the combine or stop out? And then once you've passed the combine or hit the drawdown, it puts it into a little thing and then it runs that 1,000 times or 10,000 times or whatever to know, you know, which percentage of people would pass that stage. Right? So it's saying on the expert that only like 17% of people would pass it. Because it's basically asking you to quadruple your account. Right? Doesn't make sense. But so let's see here. If I come in and I say, the daily loss limit is 0, does that mean that I just can't lose anything? No, I think it means that because they explicitly said you don't have a daily loss limit with the starter plus. But I'm going to say we're going to do this starter thing. So here we're going to change it. Let's say the drawdown can be 2,500 and the target is 3,000, right? 2,500 and 3,000. Okay. So yeah, we saved that. We run it. Okay. Passed 33, failed 66. Okay, so this one is coming out to about 33%. So 33% of people would get quote unquote funded. Okay. Then we come back to your first payout. Make sure you meet the minimum withdrawal amount of 250 for starter and 1,000 for expert. Up to withdrawal limit up to $1,200 for each payout until 30 winning days or 6,000 in payouts. After the first payout, maximum loss limit moves to 50K. So it's saying that we could potentially pull out 1,200. So now we're going to change it so that our target here is 1,200. Run it again. Okay. Here we get 64% pass rate. Okay. So 0.33 times 0.64 equals 0.221. 0.21. Or let's just say, for the sake of argument, 20%. That means that you can do it 5 times. Well, let's say 6 just to be sure. You can do it 6 times. Times, what was it? I'm coming back over to here. $97. And I should make $1,200 off of that. $582. $618. So you could make $600 overall from running this I don't know what we want to call it. Running this arbitrage opportunity. But there's a lot of wonky things involved in it. There might be something about all of that that was incorrect. It's a nice move on the indices, yeah. We'll run again today. Yeah, over now. Well, because these guys have like a complicated. They have what? 1, 2, 3, 4, 5, 6, 7. But really, we can just split it into 3 different sets, right? Sell, yes, if I had cash to buy skis. Wait, what is that website? I've never heard of that. There you go. I'm kind of wondering if my boot doesn't actually fit me very well, because if I'm like, if I went out to play with my kids in the boots, and you know, I realized that my toe was hitting the front of the boot. Now, presumably that's maybe a good thing, but like sometimes my foot gets really tired, and my calves get really tired. So I do kind of wonder if maybe it's an issue with the boot and everything. Maybe I need to put some stuff. You need to get like shims that go behind the tongue to push the foot back a little bit. Yeah, all of your comments were ignored. I actually don't know if I saw any of them. No, I did not. None of your comments are showing up. You want to talk about the So here's the thing. On the psychology thing. Okay. Maybe it's your psychology that's causing you to fail. Go and start creating algorithms. Guess what? You're going to find it's harder. Oh, generally speaking, what I find is that what people call difficulties with their psychology and everything are actually just issues with their strategy. That they don't understand the fat-tailed properties of their strategy. They think that when things go wrong, it's because of them. There you go. There's the answer. Yeah, these are all These are all the boards that they just didn't sell. 20% off. That's not terrible. I could do that. But then if they have my right height, I don't know what their size guide. Weight, 165. So I want it 155. Which they don't have. I could do 154. I'm going to close this. I kind of wonder if there's also rules, though, that are like, you can only do the starter account once. Because I was kind of looking for that, and I never found it. But there's something that kind of makes me think that if you pass it before, you can't do the thing again. You don't think there's an issue with emotions causing misbehavior? Well, so, like, the whole thing, like, the reason why people get obsessed with this stuff is threefold. Number one is that if you don't actually have an edge in the market, psychology is something that you can actually talk about. So there's a lot of experts out there and everything that really don't understand anything about the market and really don't have good strategies. So how are they going to make money from, you know, giving you advice and things like that? Well, they can talk about psychology because anybody can study this psychology and get into the psychology, right? Number two is because they've all read the Jack Swagger books and what's the one the psychology book that everybody always recommends. And these guys, they were talking to swing momentum traders. So the thing with swing momentum traders is that you're talking about guys that have like a $10 million portfolio and have lost $2 million on it. Okay. Like, yeah, in that situation, it's kind of a rough thing. If you have two losing years in a row, your fund is probably done for. Okay. Like, they're taking a huge risk. It's like a completely different situation from I've come in here and I'm risking $10 to make $10, or, you know, like what I do. Okay. Completely different level of a thing. And then the number three thing is that if you don't actually have an edge, you don't actually know how you should perform, then you're basically trading a random line. You don't have any kind of edge. You're going to get random results, and that's going to drive you crazy. And so you get into the psychology because, you know, it drives you crazy. Okay. If you go to a bank where you have the house edge, okay, then psychology becomes a very different thing. And in those, when you kind of go into what they talk about, it's about being able to perform your best as much as possible is really what that comes down to. Because, you know, you losing can affect your emotional state and cause your brain to not work as well, essentially, right? But if you're like, oh, I think I have an edge and, you know, it seems like you do pretty well, and then like, I'll just blow the account. It's not your psychology, it's your strategy. I guarantee you. I can almost guarantee that there is a fat tail in your strategy and you don't realize it. And you're just running into that fat tail over and over again and you don't know how to deal with it. You don't know how to avoid the fat tail, right? If you have a strategy and it's a distribution, I'm really mad that every time I want to use my pen, it doesn't want to run. I'm gonna try like restarting it. They changed something, and at some point this pen stopped performing as well. Okay, well, it's a little bit better. So if you have a distribution like this, right, what's going to happen is there's going to be these points over here, these fat tails over here. Like if this is like daily profit and loss or weekly profit and loss, okay, there's going to be these tails over here that are larger than the size of your account. It's not because you're going on tilt. It's because these strategies are prone to doing that. If I go and I do a back test, almost every back test that I have, okay, so there's this whole thing where you can say like, okay, based on what my stop and my target is, this is what my win rate is. But then you can also say, if my win rate is this, what is the chances of me having X number of losers in a row? And there's some math that you can go and you can do that. And every strategy that I have ever tested has a loss streak that is substantially higher than what you would expect based on the win rate of the strategy. Like it'll say it's extremely unlikely to have a loss of 8 or more, and the strategy will have us a losing streak of 20. So they are prone to this. The solution, these happen not because of your psychology, but because that's the nature of markets. So unless you have a way of effectively cutting these out and knowing when these are happening, this strategy doesn't actually work. If I've systematized my strategy, and I can go in and I can do the back test and prove the historical performance of it, and I can do it over a large enough time period, then I know exactly how these things should behave and what the deal is and everything. But when you're just kind of trading discretion, then you don't know. And the issue is that people aren't good at understanding these things. They don't understand the nature of fat tails. Our brain is wired to do regression, essentially, and it discards outliers. So when that outlier happens, you say that can't be because of the market. It has to be because of me. But it is because of the market. Still thinking about my funded futures, seeing if there's another detail that I might be missing there that might make that, going for a $1,000, $1,200 payout thing, like, not work. I don't think that they would let me do it on the treasuries. I have an algorithm. Oh, I didn't even turn it on today. Good grief. I guess I wouldn't want to turn it on, or I wouldn't want it to trade today normally. Let's turn it on and see what it would have said. How do you eliminate the fat tails? I mean, that's kind of the problem, isn't it? That really is the problem. Oh, now that's interesting. It never actually got into a very strong sell imbalance. So one thing that you can do is you can say if the range of the market on a percentage basis is over a certain amount to not trade, that will eliminate some fat tails. But it won't eliminate the fat tails that are like just a really bad losing streak. And from what I can tell, what actually happens is the market kind of sniffs out that a certain thing is working and comes for it, essentially. And that's why you get those large losing streaks. So like the only way to avoid that fat tail is to not try and trade a statistical inefficiency, essentially, right? Yeah, you can't let that go. Well, I mean, I could. What he's really doing is he's saying you should go and do it, right? Well, I don't think I'm willing to go and do an evaluation 6 times to do that. That sounds like too much effort for that little of cash. But I want to know where is there's got to be something in the way that they're doing things that makes it make sense that they would put it like that. Because I know that these guys do these kind of Monte Carlo simulations. So either this prop firm is dumb or they have another kind of little trick up their sleeve, and you're going to go and once you go and you do it, you're going to go and find out, oh, this rule actually makes it not work. But maybe that rule is you can only do the starter account once. That's the thing that keeps going through my head. Is it's got to be that there's something about the starter that you can't always just do the starter. Yeah, I uploaded the video, so when this stream ends, it'll come up. And I guarantee you there's going to be a rule. You go through and you start doing it, there's going to be a rule in there that you know what would be interesting? Oh, this actually has me thinking. Oh, not indicators. Strategies. Random baselines. Timed exit. New strategy. Long only timed exit. Long only timed exit. And then this bit right here. Direction doesn't exist. You gave up after 10 years? Wow. That's the thing, DeFi. So most of the people that say that they're profiting consistently actually aren't. They just don't understand. They just don't understand the data that's required. Doing an optimization. Oops. Random baselines. Long only timed exit. So we're going to optimize on the seed, going from 1 to 1,000. Or we're going to do it on the S&P 500. 1 minute bars. Going back to 2024. These guys, like my funded futures, do include commissions, right? Keep all the results. I think one of the things is that if you're trading discretionary based on non-technicals, not, you know, based on being informed, then you should have some idea about when that does well and when that doesn't, and when you should and shouldn't trade and things like that. Like all of those kinds of problems aren't as much a thing for me. Like, if I'm coming into a losing streak, I usually know why. Not as many in the profitable column there as I thought.
Block buy.
So look at this thing where if you come in here to like optimization graph and you say net profit based on seed. Oh yeah, that's right. We want it to give us a distribution graph and it's not. So that's where we come into our studio. Can you use a TV as a PC screen? Some you can, yes. There you go. Huh. It's not actually as good as I thought it would be. Oh, maybe it's because of this most recent downturn. Maybe it's because of this most recent downturn. $357. So normally it would be 30%. With long only, it's 35%. So long only is a 5% difference. But we've had a really nasty market lately. So let's just change this to only 2024. Found DeFi to be 100 times easier. Yeah, that sounds like a strategy with the fat tail. That is when the DeFi market falls apart, which it will. You will lose everything, no matter what you do. As long as you're involved in that market at that time, you will lose. So I think that DeFi Guide is some new guy that has come in here that wants to promote his cryptocurrency scam. And I think that Blizzard and Red Zone are both Tilt or whatever his name was. And I'm just so sick of it. Can you track their IPs to see if they're the same person? I'm sure YouTube could, but I don't have that ability. Oh, yeah. Well, that's not right. Oh, you're right. You're right, Blizzard. It's not. You're not him. I'm thinking of somebody else. There was somebody else. Maybe it was Pick Handle. There was somebody else that was commenting in there that made me think maybe, you know, because he always has multiple accounts. Why is it still doing that? Oh, the start time. Okay. Maybe it's fine. I'll just before it wasn't sorting it correctly, but let's just double check here. Total net profit. It's the smallest. Okay, it was off a little bit. That's more like it. 42%. Basically, I think that I could, with a going long only, you might be able to get a little bit better than random and kind of help your situation or whatever. There's a problem, though, of news and all that. Cool. And baseline, though, will be useful. Because now that kind of shows us that, like, there's a 10% difference. Just, you know, only going long on equities. Have you ever tried making something for spread market making? I made some attempts with unmanaged orders, but it never wants to fill both the bid and ask at the same time. It only fills the one or the other disappears. Well, I haven't done a whole lot with unmanaged orders, but for this thing over here, I think the next thing that we want to do is to have it try and manage the orders. Because always using a market order is just, you're just giving up 2 ticks on each side. That reminds me. We can do this other thing. We were supposed to be doing some machine learning stuff today, and we didn't. Oh, I thought I saved it. Where did I do this? It's 310. Okay. Maybe I just need to regenerate it. Strategy analyzer. SMA crossover. 310. I don't think that this one does. I don't think that that one is including commissions, so I guess I will not include commissions. Yes. Okay. I think that's correct. I'm not even saying what I'm doing. I'm comparing the result between NinjaTrader and in TradingView. Okay. I knew it. I knew it. I knew it. I knew it. How did I close it? Should make it a little bit easier. So if we've done this right, we should be able to correlate the two together. So let's do the same thing over here. What's this? Cumulative profit percent. Don't think I need any of these. Now it doesn't tell me the exit price, does it? Oh well. Didn't I say the 10th? Four, five. Let's do 5th. No, we shouldn't do 5, we should be 6. 6 or 7. Four, 5, 6. Or actually, we should just close this. And we should just do this the same thing as 4, 5, and 6. Yeah. Okay, so apparently the first thing is that these are sorted differently. So the last one that it took was at 1500. Well, some of that does not fit up, or is not going to fit up. Can we just ban people that talk QA? There'd be nobody left. Well, there wouldn't be no new people. No new people. So gotta find where that kind of started. So if I come here, matching these up is harder than I thought. So there's 730. No, that doesn't match up either. Oh. Oh. This is NQ. Straight. NQ. I see why it's not matching up now. So that was all incorrect. What he gave me was NQ. Let's try this again. No, that's wrong still. Hmm. That's funny. I said, oh, it needs to be 10-minute moving average. And he gave it to me on 10-minute bars instead of, I think he misunderstood what I was saying. Okay, I guess I can't do that today. Okay. Here's why I'm pissed off. Why hasn't anybody asked me about the Federal Reserve meeting today? Like, you guys are all asking me, like seriously. You want to talk to you want to follow somebody, talk about the markets, help you trading. The only thing that fucking matters today, I don't care about any of your moving averages or any of that shit, or what your psychology situation is today. What's going to help you today is understanding that there's a Federal Reserve meeting today and how the market may be positioning themselves ahead of the Federal Reserve meeting. And nobody has asked that. This is why I get frustrated. Now, I think that some of you guys, like D and Uzi and those guys, they're not asking because they already have their opinion about it, you know? But like, especially for new people that come in that I've never seen before, and the things that they want to talk about, it just brings me back to this thing that's like, I think that most day traders are stupid. So we want to talk about if we can arbitrage out something with a prop firm. You know, like, ignore you. Well, I don't think I read all of the messages today. That's, I say one thing. because I was looking at stuff. So I might have missed some. Well, it really looks to me like that the market is very much on hold and wants to know what the Federal Reserve thinks. I think that there's a lot of room for the Federal Reserve to say, well, like the risk to inflation from these tariffs isn't that huge, and we haven't seen it yet, right? What makes your opinion on picky handle? Then what are you here for? What did you think that you were going to get here? Good grief. You don't think that somebody that talks about futures trading the DOM on ZN is going to want to talk about the Federal Reserve meeting today? Ugh. Think like a broker or a bank, but I don't like I'm tired of wasting time on people that don't get it and never will. I'm sick of wasting my time on a larger day trading community that is really just fucking stupid, that really does not even understand the game that they're playing. Don't you think if somebody wanted you, they would have asked for it? Well, like, that's my whole point, pick handle, is that you're too stupid to even care about the one thing that would actually help you out right now. You come in, and I don't think pick handle has even asked the question. No. I am angry with people that are tuned in. I like, if your thing is I'm doing DeFi and I don't care if you're here. I really don't. When answers, because I know what I'm talking about and I look at this every day. And I don't care if you think that my Fed opinion is meaningful or not. But what we are here to do is we're here to trade, and we're here to get as good at trading as possible. So if we're going to get as good at trading as possible, the one thing that's going to help your trading today is to understand what's going on with the Fed. Don't you think that we should be talking about that? What did you think that the stream was going to be? Yeah, what you need to know is how the market will react regarding the Fed decision. So what's the most likely scenario? Most likely scenario is he doesn't really say anything all that meaningful or different. And will the market interpret that? I don't know. I do think that you get the SEP too, though, don't you? So probably that's going to be the most meaningful thing. Is do the Fed members see a rate cut midsummer or not? The video will always be here, and I'm sure it's appealing to some maybe. I don't know. I don't really have very good stats on like how many people watch them afterwards. I know that there are people that do it. But you watch like the live streams. I mean, like the individual videos is a different thing. Okay, pick handle. You're just arguing around in circles. It's just tilts is what that is. It's that same idiot, because he's not actually making an argument here, right? Whether I have authority on a particular topic or not, like because I'm famous or my opinion is irrelevant here. What's relevant is that there is a Federal Reserve meeting today, and if we're going to be effective at trading today, we have to understand it. This guy is he's only trying to make an argument because he thinks that if he comes in and he tries to undermine me every day, that will somehow help him. Oh yeah, B-Dizzle, I did see your message yesterday, by the way. I was doing lots of things. I mean, basically, my plan is to get this last video out and then go back to maybe making videos once a month or once a quarter. That's 100% what it's going to be. I mean, to still do the stream, but then even then on the stream, I might be spending more time just staring at the screen. Well, not staring at the screen, but I mean, I'll be doing work off screen and you won't be able to see it, and I won't be talking. You know? Like if you guys want good content, then you got to reward good content, and you're not. Even those of you guys that are here every day, and I really appreciate you, but it's not enough. It's not enough to come in here, deal with these fucking trolls every day, deal with the absolutely brain dead day trading community in general. And for what? Absolutely no reward in it. Why would I keep doing it? In some vain hope that eventually the channel will take off and it'll all be worth it. And I don't think that it's ever going to happen now. Talk moving averages. I know. Right. Market to people's stupidity. I'm not interested in doing that. It's like they already drive me crazy the most already. So like, why should I go and gear my content towards attracting more stupid people? My teaching style is, well, you haven't seen me been teaching anything. You've only seen me dealing with stupid people. Make a separate channel. Make a separate YouTube channel, break all of the FTC rules, see how many people we get. Yeah, again, people don't want to learn, they want to argue, that's why it's to this point. Yeah, no, and probably 3 or 4 of the people that are commenting without blue names. B-Dizzle I know is legit. Pick Handle, I already, I already took care of him. I haven't seen any comments from Red Zone, but like that's probably because he has to switch between the accounts, right? And I'm sure if we were to keep going for another hour, we'd probably see another random account pop up out of nowhere that seems to pop, that is actually Tilt. Yeah, I think Red Zone is Tilt. I'm still the jury is still out on DeFi. He seems to be doing the same sort of thing. Like, doesn't really seem to have any kind of a point. Like, if I come in and I'm like, hey, okay, guys, like, this is why I'm frustrated by what you're doing. This is why this is stupid. It's instead of going, oh, okay, I should go and I should make a useful comment that might provoke some discussion that I would actually learn from. No, he's just like, yeah, maybe you should quit. Fuck you, dude. You don't need to be here either. Goodbye. Especially, you know what? Like, having DeFi in their name should have been an auto ban to begin with anyways. Right. Anyways, normally I would like to stream the Federal Reserve. I think it's going to be a relatively significant one. Deltas are poor on ZN. You know what? The behavior in ZN has been incredibly odd because that decline, which was pretty significant, had hardly any delta behind it. And now this pullback has had a very significant amount of delta on it. But it didn't pull back nearly as far. So I think that we are seeing some spread trades come through, but it's too iffy for me to really sort out what they're really doing or how they're trying to position themselves for this meeting. You go to his channel, you see that he has candlestick trading. Yeah, well. Oh yeah, this whole time I was just waiting until after 9 o'clock so that I could give you the video link. Here we go. The most complete, exhaustive guide to cumulative delta that there is. So I think that one's pretty thorough. Yeah, people just ask what the DOMs are. You will trade your trading on. It really is. But I don't know if we're even getting any new people. Like, that's the other thing is I'm not sure if we're getting new people at all today. It used to be that we would have up to like a 24 viewers, and now we usually only get up to 12. And like I know who most of them are, so I really do think that it is just Tilt coming in every day to piss me off. But that's why it was like, well, it doesn't really cost me anything to stream. So if I'm going to do other stuff with this, I can just stream it and do it on off screen, right? And then tell off anybody that wants to come in with dumb questions again. Let's see if it would resemble how you teach it. Yeah, we'll go and look at it. I mean, I have so B-Dizzle, because B-Dizzle was saying, oh well, we need to be doing a little bit more like deep of a thing with a small group of people, right? And we do that from time to time, and like usually what happens is people just don't put in the work. But what I'm doing right now is I have a set of indicators that filter level 2 data and order flow data in general, let's say. And the next thing that we want to do is try and incorporate machine learning stuff into it. So the next major project that we're going towards, I think, is the setting up a communication between NinjaTrader and a machine learning server. Yeah, I think I really do kind of think it is. It's like I got rid of his other two accounts that were masquerading here, so he comes back with the other one. Doesn't matter. I'm gonna get going. I'll see you guys tomorrow.